Good morning to all my friends and family, and welcome to Jim's 5 a.m. club. It's a glorious spring morning here in Sydney. There's a gentle westerly breeze just blowing across the harbour, and as you can see, sunrise is just about to happen. You've got the Opera House silhouetted against that pinkish orangey horizon. You've got a ferry heading off to Manly. Can't see what it is from here, just a little bit too far for me at the moment. And we're going to do a traditional walk and talk. It's Tuesday, and I start work at 6:30. So before work I'll try and knock out a couple of Jim's 5 a.m. clubs, because I am busily trying to get to 1,000. So what are we going to talk about today? Today's a tricky day, but we'll come up with something. What I want to chat to you about today is a topic that I've got near and dear to my heart. Overnight I noticed that the FTSE, the Nasdaq and the Dow Jones had a bit of a dip, dropping by about 3%, which is a pretty big fall overnight. And no doubt, invariably throughout the day, I'm going to have people call me or message me saying that the share market is crashing, and there'll be the news articles and the headlines talking about how billions have been lost from the Australian share market. But I've got to tell you, it doesn't faze me, doesn't worry me, doesn't concern me one iota, because today all I'll be doing is I'll be chatting with my stockbroker, and we'll be deciding what to buy. So a couple of very important lessons from an investment perspective is that you buy on the dip, buy on the fall, and just keep on topping up. As long as it falls, you top up when it's dropping off, and then you reap the rewards when it kicks back. Because one thing I've learnt over the years, and one thing that my share broker has taught me, is that markets always overcorrect. Now, they get spooked by a piece of news, like we all do. We all get spooked when we hear certain types of news, and then what you do is you rationalise, you assess, you reassess, and then all of a sudden you realise that news is not all that significant after all. It can be managed and dealt with, and then the share market rallies back quickly. I've said it time and time again, and my broker keeps on reminding me of this, that Warren Buffett, who's the doyen of investment, always says that on an annual basis the share market will vary by up to 10% on a yearly basis, but for sure and for certain it comes back and breaks new records. And every 2 or 3 years the share market will drop by up to 40%, 30% or more. But lo and behold, it recovers, and not only does it recover, but it also hits new record highs. Let me talk to you today about a concept that my share broker floated with me a while ago, and the concept is the concept of a vomit fund. So there are lots of people who have got significant amounts of money in their superannuation accounts, managed by brokers and fund managers and all of these other people. But my broker made a very, very good point. He said that we all know We all know that the markets drop on an annual basis and every 2 or 3 years. Now we know that, we see it all the bloody time. And he says that what some of his clients do is that they sell off their superannuation funds and turn it all to cash. They put it in cash reserves, and they just sit back and wait. They sit back and wait, and when the market drops, and your broker will be in a better position to assess how it all feels and what it all looks like. When the market drops or even crashes, that's when they go on their shopping spree and start buying quality stocks at massively discounted prices. You can understand where I'm going with this, and once the price of your shares recovers, and they recover very, very quickly, all you do is sell your shares and turn it back to cash, and then just wait again for the next opportunity, which may come in a month's time, 6 months' time, a year's time. But in that short amount of time, you've made a handful of money. And the beauty of investing within your superannuation account is that it's all juicily tax-free. Yep, you're hearing it from me. I guess the big question is, why hasn't anybody else told you this? Why hasn't anybody else opened your eyes to the opportunities of trading shares in your superannuation fund? As I say, I've got a very, very good broker who is able to set up those structures to make it really, really easy. And there are occasions where companies get listed, floated, and you can get your allocation of shares, and as soon as they go onto the market, you can just take your profits and tuck them away in your superannuation account and wait for the next opportunity to present itself. Now, we've said time and time again, the opportunity of a lifetime comes once or twice a day. And if you've got your superannuation there, sitting there, why not trade it? Why not play it? Why not amplify the investments so that you make it worthwhile, rather than just sit back and be comfortable with a 10 or 20% increase every now and then, followed by a kick in the teeth when the market crashes. So have a think about it. Have a think about setting up an investment fund or a vomit fund to take advantage of days like today. I will definitely be buying today, and I'll continue buying. I'll be continuing to buy and average down as the market drops and falls away, because I know, and Warren Buffett has assured me, that the market will come back. Not only will it come back, but it will climb to a new high. So whatever you buy at a discount, you're going to be rewarded with handsomely, with a nice premium. And as I said, in your superannuation account, those premiums are tax-free. Absolutely tax-free. So work your superannuation dollars hard. Sweat those assets. Don't let them get lazy and fat, but not fat in terms of growth, fat in terms of plaque and cholesterol and all the other nasties. Because remember, when your money is invested, you're paying fees in your superannuation account, so you might as well be getting a massive return every now and then turning it back to cash and keeping it safe. Especially when you're starting to get into your 60s, you don't want your money fully exposed all the time. So this is why this strategy is so bloody good, because what you're doing is you're having a go. When the price of the shares are at their best in terms of value, and then you're selling as soon as it recovers, because as we say, they over-recover. The markets overreact in both directions. They overreact on the way down and they overreact on the way up. So when they're overreacting on the way down, we buy, and when they're overreacting on the way up, you sell. It's that bloody simple. But once again, why has nobody ever told you this? That's the big question you need to ask yourself. Why the hell are you surrounded by advisors, accountants, and people who don't know this, or at least are not sharing this? It's not. I'm not offering you investment advice, because by offering investment advice, I take the risk and the accountability. Each and every person has to make their own decisions and make their own assessments. But what I'm telling you is, there are these dynamics, there are these investment dynamics that everybody knows about, in terms of, you can buy books and you can read it, but it just makes common sense. Just go and grab yourself a chart of how the share market performs over a weekly, monthly, yearly basis, and you'll see that there are peaks and troughs throughout there. You know, there are certain blue chip shares that, you know, once they get oversold, they're crying out to be bought. They're yelling out, please buy me, because you know that there is a guaranteed return, unless there's an absolute disaster, which is not going to be. So you're not going to get wealthy betting against the share market, but please take some time to consider setting up a vomit fund, and you start to buy your shares when all the other investors are pulling their hair out and getting margin called and suffering, because you've been patient, you've had a strategy, you've had a tactic, you've got a relationship with a share broker who's ready to pounce when the time is right. So over to you. Anyway, thank you very much for taking your time to tune in to Jim's 5 a.m. Club on this magnificent spring morning. Look at the sun just reflecting off those windows over there. And I hope this advice is like bright sunshine to a lot of my friends and family who are watching Jim's 5 a.m. Club. I know there are people out there who will be saying, oh, you know, but this and but that. You know, if you've got any negative feedback, keep it to yourself. I'm not interested. I'm only interested in growing and developing and using every opportunity while I can. And if this is for you, feel free to private message me. I can pass on details of my broker. I do it every single day, and it's fun. A lot of people are happy to have a Ferrari or two and an expensive car in the garage. For me, I prefer to have a fleet of Ferraris in the share market, just doing a lap every now and then and coming back, so I get more enjoyment out of buying shares at discounted prices and selling them when they're at a absolute peak. So take care. Wishing you all the very best once again from Jim's 5 a.m. Club. And let's finish off with a positive affirmation. I'm alive, I'm well, and I feel absolutely great. And don't forget, markets overreact on the upside, overreact on the downside, just like people. We're surrounded by people who overreact. The media overreacts. Our friends and family overreact. Let's use that overreaction to our advantage by taking the time to set up the structures and then sit waiting for that opportunity to start buying and then start selling. Take care, everybody, from Jim's 5 a.m. Club. I love you all and wishing you all the best on this most glorious spring morning. Ciao for now, and until we chat again, yasas.